Welcome to Know What You Are Investing podcast. We decode the world's top companies. What they do, how they grow, why it matters. In this episode, we break down NVIDIA's Q1 FY26 performance, from record-breaking data center growth and the Blackwell AI platform ramp-up, to the financial hit from U.S. export controls in China and NVIDIA's vision of global AI infrastructure. Welcome to the Deep Dive. Today we're really getting into the weeds on the latest from NVIDIA. We're talking their Q1 results for fiscal 2026. That quarter just closed out April 27th, 2025.
Yeah, lots to unpack there.
Definitely. We've got the official press release, the earnings call transcript, the usual sources. And our mission, as always, is to go beyond just the headlines. We want to pull out the key insights, the stuff that really matters from these documents, so you get a clear picture of the quarter and, what it suggests for the future.
Right, and looking at the general feeling from the earnings call introductions.
Yeah.
Well, it was another strong quarter, fundamentally, even with some pretty serious challenges they had to navigate.
That seems to be the theme lately. Strong growth, but headwinds, too.
Exactly. The CFO, Colette Kress, she summed it up another very powerful quarter. And the top-line numbers, they certainly show that. Revenue hit $44 billion.
$44 billion.
Yep. That's up, 69% from the same time last year? Huge jump.
Yeah.
And the real engine, data center.
Yeah.
That was $39 billion.
39, so almost all of it.
Pretty much. And that was up 73% year on year. Just incredible growth there.
73%, okay.
And a key point Colette made about that data center growth, it's this big shift happening in AI workloads. It's moving heavily towards inference now.
Yeah.
Away from just training.
Right, the using the AI part, not just building it.
Exactly. And that's driving these build-outs of what they're calling AI factories.
Yep. And
customers are making, firm commitments. It's not speculative.
Got it. And Jensen Huang, the CEO, what was his take?
Well, he really leaned into this idea of AI becoming essential infrastructure, like, electricity or the internet.
Yeah.
Foundational stuff.
Okay.
And he sees NVIDIA's platform as, central to building that out globally.
So on the call, he also mentioned these 4 positive surprises that were driving growth even faster than they expected at the start of the year. Let's break those down.
Right. Okay. So surprise number 1, the massive surge in demand for reasoning AI. This is AI that needs to sort of think step by step, not just spit out a quick answer.
More complex computation.
Way more. And that directly fuels this huge step up in inference demand we were just talking about.
Okay, that makes sense. What was number 2?
Number 2 was more external. It was the change in U.S. policy rescinding that AI diffusion rule and President Trump's stated goal of promoting U.S. tech with partners.
Ah, the geopolitical angle.
Yeah. And Jensen linked that timing to some really significant AI infrastructure deals being announced globally. He specifically called out Saudi Arabia's 500-megawatt project and that huge 5-gigawatt AI campus planned in the UAE.
5 gigawatts, that's enormous.
Right. So big sovereign AI push is happening.
Okay, third surprise.
Third one is enterprise AI really starting to take off. Companies bringing AI onto their own premises, integrating it with their existing IT.
So not just in the cloud anymore.
Exactly. Yeah. Using things like their new RTX Pro servers or the smaller DGX, Spark and Station systems, bringing AI into the, traditional data center.
And the fourth.
Fourth is industrial AI. He tied this to the whole global reshoring trend in manufacturing. Building AI factories, basically, alongside physical factories. Using Omniverse for simulation, Isaac GR00T for robotics, that kind of thing. Automating industry.
Huh. So those 4 things, reasoning AI demand, the sovereign AI boost, enterprise AI taking off, and industrial AI, those aren't small shifts.
No, they're fundamental.
It really paints a picture of AI moving beyond just the hyperscalers and becoming, like he said, infrastructure, spreading everywhere.
That seems to be the core message, yeah. The growth story has legs because the applications are broadening out significantly.
All right, let's dive into the actual financial results then, the numbers themselves.
Okay, so top line, as we said, $44.1 billion for Q1.
Up 12% from Q4, up 69% year over year.
Right, and breaking that down, data center, the big one, $39.1 billion. That's up 10% sequentially, 73% year over year. Still the powerhouse.
Clearly. What about the other segments?
They were actually pretty strong too. Gaming had a record quarter.
Oh, really?
Yeah, $3.8 billion.
Right.
Up 48% sequentially, 42% year over year. Very strong.
Okay.
Automotive was $567 million. That was down just a tiny bit, 1% sequentially, but up a huge 72% year over year.
Interesting. Big jump there year over year.
Yeah. In professional visualization, $509 million. Flat sequentially, but up 19% year over year.
So growth pretty much across the board, just dominated by data center.
Absolutely.
Now, profitability, gross margins, I saw GAAP was 60.5%, non-GAAP 61.0%. That seems quite a bit lower than we've seen recently. They were up in the mid-70s, right?
Yeah, exactly. Good catch. That's where the big challenge this quarter really shows up in the numbers. The main reason for that drop was a very significant charge they had to take.
By charge? For what?
It was $4.5 billion, and it was specifically related to excess inventory of their H20 product and related purchase commitments.
H20, that was the chip for China, right, to meet the previous export rules.
Precisely. And this charge is a direct result of the new U.S. export controls that kicked in mid-quarter in April.
Ah, okay. So this isn't an operational margin decline. It's a specific hit from those rule changes.
Yeah. Exactly. It's a big hit, but it's tied to that specific event. We'll get more into the China details in a bit, but for margins, that's the key thing. In fact, they pointed out, if you exclude that $4.5 billion charge, the non-GAAP gross margin would have been 71.3%.
Okay, 71.3%. That's much closer to what we'd expect, although still maybe a little lower than peak.
Right. Still strong, but reflects that impact clearly.
And I assume that charge hit the bottom line, too, earnings per share.
Yep. Flowed right through. GAAP EPS was 76 cents, non-GAAP $0.81, both down sequentially because of that charge.
Makes sense.
And again, they gave the adjusted number. Excluding the charge and the tax effect, non-GAAP EPS would have been 96 cents.
Right. And just quickly, GAAP is the standard accounting. Non-GAAP is adjusted for things like this charge to show underlying performance.
Exactly. It gives you a clearer view of the ongoing operations minus these, let's call them unusual items.
Got it. What about operating expenses? Still investing heavily.
Oh, yeah. OpEx was up.
Yeah.
GAAP $5.03 billion, non-GAAP $3.58 billion, both up around 6-7% from Q4. They said it reflects investments in, infrastructure hiring, standard growth stuff.
Yeah.
And they expect full-year OpEx growth in the mid-30% range. So still investing aggressively.
And shareholder returns, still buying back stock.
Big time. Returned a record $14.3 billion in Q1. Mostly buybacks, some dividend.
$14 billion in one quarter. Wow.
Yeah. And they announced the usual cash dividend, 0.01 cents per share post-split.
Okay, looking forward then, the outlook for Q2.
Right. Guidance for Q2 revenue is $45.0 billion, plus or minus 2%.
$45 billion. So sequential growth even after that huge Q1.
Yes, but here's the really crucial context for that number.
Okay.
That $45 billion already factors in an expected loss of about $8.0 billion in H20 revenue in Q2.
Wait, say that again. It includes an $8 billion hit from H20.
Exactly. Because of those China export rules continuing, they expect basically zero H20 revenue for Q2, which was an $8 billion run rate business. So that $45 billion guidance implies the rest of the business is growing incredibly strongly to overcome that headwind and still grow sequentially.
That's actually staggering. The underlying growth must be immense.
It really puts the Blackwell ramp and other demand into perspective.
Okay. And Q2 gross margin outlook. Bouncing back.
Yeah, they expect it to improve. GAAP outlook is 71.8%, non-GAAP 72.0%. So recovering from the Q1 charge impact. And they said the goal is to get back towards the mid-70s later in the year.
Okay. So the headline is strong sequential growth guidance, but the subtext is massive underlying growth ex-China.
This is a perfect summary.
All right, let's really focus on that engine then, the data center segment. We know the drivers were inference and AI factories. What's the detail there?
Well, the absolute main event is the Blackwell ramp. They called it the fastest product ramp in the company's history, period.
Faster than Hopper, faster than Ampere.
Apparently so. In Q1, Blackwell already made up nearly 70% of their data center compute revenue.
70% already.
Yeah, which means the transition from Hopper is happening incredibly fast, at least for the big customers.
Okay, so Blackwell is shipping in volume.
Big volume. They talked about the NVL72, that's the full rack system, 72 GPUs, designed for inference and large models. It's in full production. And they said major hyperscalers are deploying, on average, nearly 1,000 of these racks per week.
1,000 racks a week. That's 72,000 Blackwell GPUs a week, just from hyperscalers.
Roughly, yeah. That's the kind of scale they're talking about. They specifically mentioned Microsoft deploying tens of thousands already, on their way to hundreds of thousands.
Unbelievable scale. And the next step, GB300.
GB300 systems, yeah. Those are sampling now. Production shipments expected later this quarter, so Q2.
How does that fit in?
It's designed as a seamless upgrade, fits into the same NVL72 rack structure, but it offers 50% more HBM, that's super fast memory, and 50% more dense FP4 inference performance compared to the B200 chip in the current racks.
So even more power for inference.
Exactly. And that ties back to the inference surge they keep highlighting. They mentioned AI inference token generation advantage. The actual output of AI models surged tenfold in just 1 year.
Tenfold?
Yeah, because this reasoning AI, it just needs so many more tokens per task. Hundreds, thousands of times more than a simple chatbot query. That's why the compute demand for inference is exploding.
And they have software helping too, right? Dynamo?
Right, NVIDIA Dynamo, part of their software stack. They claim it gives a 30x inference throughput boost on the Blackwell NVL72, specifically for these reasoning models.
30 times boost just from software optimization.
That's the claim. They backed it up with some MLPerf benchmark results. Sure. GB200 NVL72 showing up to 30x higher inference throughput than H200 on a specific Llama 3.1 benchmark. So hardware and software working together.
Okay. And this is all fueling these AI factories popping up everywhere.
Globally, yeah. They said nearly 100 NVIDIA-powered AI factories are in flight.
In flight, meaning being built or planned.
Yeah, in progress. That's double the number from a year ago. And interestingly, the average size of these factories, the number of GPUs per factory, is also doubling.
So fewer, but much, much bigger deployments.
Seems like it. And they listed examples beyond the U.S., Saudi Arabia with Humane, UAE with Stargate, Taiwan with Foxconn, and the government.
Right, the sovereign AI push.
Exactly. And the vision they talked about is projects needing tens of gigawatts of power eventually, just a different scale altogether.
And the networking to connect all this, that has to be growing too.
Massively. Networking revenue was up 64% just sequentially. It kept $5 billion in Q1.
Like $1 billion for networking.
Yeah. Their NVLink for inside the cluster, scale-up, shipped over $1 billion worth in Q1. And Spectrum-X, their enhanced Ethernet for scale-out between clusters, that's now an $8 billion annualized run rate business.
$8 billion run rate for Spectrum-X. Wow.
Yeah, and they added major cloud players like Google Cloud and Meta as customers for that. They're also launching new silicon photonics switches for even higher speeds. Networking is clearly a huge growing part of the story.
And this all connects back to those other growth drivers, too. Enterprise and industrial AI getting specific products.
Right. RTX Pro, DGX Spark Station for enterprise, Omniverse, Isaac, automotive collaborations for industrial. They're building out the product portfolio to hit all these expanding markets beyond just the cloud giants.
Okay, phenomenal growth picture there. But we have to talk about the elephant in the room, the China situation, the export controls.
Yeah, definitely the major headwind casting a shadow.
So what exactly happened again? Remind us of the timeline.
Okay, so April 9th, 2025, that was the date NVIDIA was told they now need a specific license to export their H20 products to China.
And H20 was their main compliant chip for China before that date.
Correct. It was designed specifically to meet the previous set of rules.
And the immediate impact in Q1 was?
Well, they shipped a lot of the H20 before April 9th, $4.6 billion worth.
Oh, okay.
But they had another $2.5 billion worth of H20 orders that were ready to go in Q1 that they couldn't ship because the rule changed.
Ah, so that's the inventory that got stuck.
Exactly. That unshippable $2.5 billion in product and related component commitments is what directly led to that $4.5 billion charge we talked about earlier.
The one that hit margins and EPS. Got it. It wasn't just writing off inventory, it was purchase commitments too.
Right. And the impact continues. That Q2 outlook, the $45 billion, as we said, that reflects an expected loss of roughly $8.0 billion in H20 revenue for Q2.
Because they just can't ship it anymore.
Pretty much, yeah. That revenue stream is effectively gone for now.
And Jensen Huang was quite direct about this on the call, wasn't he?
Very direct. He said, and this is basically a direct quote, "Today, however, the $50 billion China market is effectively closed to U.S. industry."
$50 billion market. Closed. That's blunt.
Yeah. He added, "The H20 export ban ended our Hopper data center business in China. We cannot reduce Hopper further to comply."
So no tweaking Hopper to make it fit the new rules?
Apparently not. The new rules are too strict for that architecture, it seems.
Did he talk about the longer-term impact?
He did. He warned that losing access would have a material adverse impact on our business going forward and benefit our foreign competitors in China and worldwide. And he also pushed back on the idea that China can't develop its own chips, saying that assumption was always questionable and now is clearly wrong. His point was, China's AI moves on with or without U.S. chips.
Strong words. So is there any plan B? Are they working on a new compliant chip for China?
They said they're looking at limited options, evaluating possibilities, but, quote, don't have anything at the moment.
Limited options. Doesn't sound too optimistic.
He described the new limits as quite stringent, suggesting it's a difficult task.
And politically, he noted the context around the previous rules being seen as counterproductive by some, like President Trump, and the idea of promoting tech with trusted partners instead.
Yes, he briefly touched on that political dimension as context for the current situation, reporting what was said, not taking a stance.
Right. Okay, let's shift to the Q&A. The analyst questions always add color. What were some highlights there? Joe Moore asked about meeting that huge inference demand, particularly with NVL72.
Yeah, good question. The gist of the response was, NVIDIA wants to serve all of it. They think they're on track for most of it. And they stressed again why NVL72, the Grace Blackwell system, is so crucial. It's because reasoning AI needs just vastly more tokens, hundreds or thousands times more than simple stuff. Right. And Grace Blackwell gives something like a 40x speed up or throughput boost for that specific workload compared to Hopper. It's built for it.
Okay. Vivek Arya asked about the China impact again, and also that big picture $1 trillion AI build-out idea.
Right. So Colette clarified the Q1 charge and the Q2 $8 billion H20 revenue loss again. Yeah. And she reiterated their view of China as a $50 billion future market that's now basically off limits.
And Jensen on the $1 trillion build-out.
He doubled down on the AI as new infrastructure view, like electricity, like the internet. Still very early days, he thinks. And he pointed to the expansion beyond cloud into enterprise, telcos, industrial AI, the AI factory in every factory idea as the drivers that are really kicking into turbocharge now.
Turbocharge, okay. CJ Muse asked about big, maybe unannounced AI cluster deals and if that impacts Blackwell lead times.
Jensen's response was interesting. He said they actually have more orders now than the last time he talked about orders.
More orders now, even with the massive shipment.
Yeah. He said the supply chain is ramping hard and they expect to be busy for many more years. And he confirmed, yes, there are many more unannounced AI factories globally, referencing that 100 in flight number. So the build-out is real and just getting started, in his view.
Wow. Okay, Ben Rates has connected the dots on the Q2 guidance, asking if that 45.B number, despite the $8 China loss, shows real strength elsewhere and gives them conviction for growth through the year.
Exactly. And Colette confirmed, yes, the math works. Yeah. The $45 includes the $8 H20 hit. So the non-China growth, driven by Blackwell ramp and more supply, is strong enough to offset that and grow the total revenue sequentially.
Incredible.
And Jensen tied that conviction right back to his 4 positive surprises. Reasoning AI, sovereign AI projects, enterprise, industrial. Those are the things kicking into turbocharge.
Makes sense. Timothy Arcuri pushed again on a potential new China product and getting back to previous run rates there.
And Jensen basically shut that down for now. He repeated, the new limits mean it's the end of the road for Hopper in China.
It's the road.
Yeah. Said they have limited options, nothing to announce. Limits are quite stringent. He definitely did not confirm they could get back to the old $7-8 billion quarterly run rate in China with any potential new product. Sounded very uncertain.
Okay. And lastly, Aaron Rakers asked about the networking strength Ethernet adoption attach rates.
Jensen just highlighted the success across the board there. NVLink for scale-up, InfiniBand still strong, Spectrum-X Ethernet now at that $8 billion plus run rate with Google and Meta on board, Bluefield DPUs growing. His point was, all their networking platforms are crucial for building these AI factories at scale, and all are contributing significantly.
So wrapping this all up, it was a quarter of, well, frankly, exceptional growth, almost all driven by data center and that incredibly fast Blackwell ramp.
Right. But at the same time, they faced a major financial hit from the new U.S. export rules impacting China. That $4.5 billion charge and the ongoing $8 billion quarterly revenue loss is significant.
And strategically, the vision is clear. AI is becoming fundamental infrastructure. Demand is accelerating, driven by things like reasoning AI, global AI factory buildouts, including sovereign projects, and the push into enterprise and industrial.
Exactly. Blackwell is key, inference is the hot workload, and the global buildout seems to be accelerating. Those are the big takeaways for the future drivers, despite the China headwinds.
Well, thanks for diving deep into all that with us. It's certainly a dynamic picture, incredible momentum alongside some serious geopolitical friction.
Definitely. And maybe a final thought for you, the listener, to chew on. Considering everything we talked about, the speed of these AI factory deployments, the focus on reasoning AI, but also the concentration of this key technology and the export controls, what does it really mean for global competition and maybe even stability when the very infrastructure for future intelligence becomes such a contested resource? Something to think about.
Thanks for your listening Know What You Are Investing podcast. Decode the world's top companies. what they do, how they grow, why it matters. Don't forget to subscribe and share this episode if you found it insightful. See you in the next one.